Alright, let's look at some of these longer term spec plays. When it comes to First Solar, I'm looking at it longer term. When I mean longer term, I'm talking a couple years out. The base that we hit in this company was, in this recession at least, was around the $90 area. I don't think you're going to see $90 ever again for First Solar. I could be wrong. I could be ridiculously, terribly wrong. But right now, this double bottom setup is looking very, very promising for people that are looking to get in very long term for solar on a very healthy cash-ridden company. I mean, obviously they're not making revenues right now because a lot of people are cutting costs and really analyzing, do they need solar panels and such. So First Solar, yes, they had a bad quarter. Is that going to kill them forever? No, it's not. As you can see, this was a bad quarter. This was a good quarter. This was a bad quarter. It's been wishy-washy with First Solar. That's why I didn't trade it going into earnings. I considered it. I didn't do it. We're holding the 200-day moving average right now. If we don't continue to hold that, 139.90 is the spot to beat. Right now, the 200-day moving average is 145.90. So, when it's down right now and after hours 148, we still have $3 to go before we really get to the base of this 200-day simple moving average. Target right now, if you wanted to play it short term, would probably be the 100-day. Above that, the 50-day. We have plenty of targets for this if you want to play it short term. But First Solar right now is looking like it's going to set up long term. I have faith in it, and I'm probably going to get my brother into it by the end of the week. Again, this is just my opinion. This is just what I see. I like it. I'm going to bite on it. Let's go to FLIR, F-L-I-R. I like this one too for a longer term play. Now, even short term, I like it because of this crossover. Okay, we're starting to experience the point where the 5-day simple moving average could turn up above that 10-day simple moving average, and that's important for momentum plays, especially on this low volume distribution that it's been experiencing. 21 is the spot to grab it at. It closed today at 21.29. It's up 12 cents in after hours. This might be a solid opportunity to get into. Now it's held every single time since the beginning of May. It's tried to challenge this descending trend line resistance. Well, I think that it could pretty successfully break above it, to tell you the truth, because we're starting to see a tightening gap between the $21 support and this descending trend line price resistance. I think it could be profitable in short term and in long term. So this is just another thing to consider. Let's look at it from let's take it a year out. We saw the bottom at 19. It's looking like a pretty decent grab. Again, this is another company that I'm really heavily considering for my brother for a 1 to 2, possibly 3-year hold. It probably is going to turn into an intermediate hold of a couple months. But again, this is something to look at, especially if the Nasdaq and the tech sector begins to turn around. Diamond Offshore. This has been one of the craziest range trades I think I've seen all year. $73, $92, back to $73, back to $92. All in the matter of, from I guess the beginning of May, we've been seeing this. It's craziness, pure craziness. It's a choppy ticker, and I think it's gonna see a decline. So if you're in this long term, I think it'll be a decent time to take some profits. Now, of course, we're looking at lower volume distribution, but again, I think that oil has overextended its stay yet again. I think we're going to see another pullback in oil. Now let's talk about these smaller cap names that I'm looking for swing trades and short-term trades. Hero, yes, it's an offshore incorporated company. It deals with oil, it deals with rigs, it deals with all of that jazz. Well, it's looking like a pretty solid, semi kind of range trade, but more along the lines of a bump and run. And I've been talking about bump and runs for quite some time now, and I think that bump and runs are something to really, really heavily consider when you're looking at getting in short term. This is something that here's the target. Here's your target right here. This is a target price, and $5 is the spot to look at. 433. If it holds 433, it has a high potential to pop, especially again on this low volume distribution. We'll get some more tickers in the next video.